I
I
know
know.
I usually stick with I definitely stick with uh USD led trades or pairs.
Okay. So yeah,
Uh, and then I just started, messing with uh Great British ones from what y'all were telling me last night and how it worked out. And
yeah,
then I don't know why, but I've always liked uh the Australian and the NZD.
yeah,
So those are the ones that I typically rock with.
yeah. So like I said last night, get like a handful of pairs, like maybe three at a time, and just really like try to study those and figure them out. So you can really start to get an idea of how markets move. But the dollar index is important. So you told me that a lot of your pairs are U.S. based pairs, and
You starting to break
you said what? What'd you say?
you started to break up, man.
Oh,
But I say something? Yeah, I think
yeah.
I can hear you better now.
Okay. But
Yeah.
yeah, so a lot of the pairs that I trade to and like the pairs you trade are US dollar based. So the DXY is the dollar index, and it's basically the chart for the value of the US dollar. And it's important because it determines what all the pairs we trade, as far as USD pairs, whether it's the dollar yen or the New Zealand dollar, US dollar, like anything with USD in it, that
Yeah.
dollar index is going to tell you what that pair is going to do. So let me go ahead and start to show you that. Start the screen sharing. You see my screen?
Uh, yeah, nah, I do.
Okay. So up here, let me move this. So up here, I'm gonna watch this here. You got to see the DXY right here.
Hmm.
So like I said, this is the dollar index. This is the chart that basically is showing you the value of the dollar. So you look at this, and it's going to basically determine what all other U.S. pairs are going to do. Now, this is how we get into the whole inverse and consolidated pairs. What I was telling you last night, because you had two trades. One of them was in negative, the other four was in blue. And I was like, the reason why that was a negative because you was trading inverse pairs. So anytime you got the dollar, right? Like you see this pair right here, the Great Britain pound USD.
Hmm.
Anytime you look at this chart, you see how it's like been down, right? Anytime the value of the US dollar goes down, any pair with the US dollar second is going to go up. Any pair of the US dollar is going to go down with this. So basically, if this goes down and the pound
Okay.
USD goes
So it would be wise to sell. It would be wise to sell like USD CAD, and it would be smart to buy in for like GBP USD.
yeah, because like I said, they're inverse
All
pairs.
right.
So if you look at like I said,
And that's when the dollar index goes down.
you said say it again.
I said like when the dollar index is going down, it would be smart to sell with the USD leading, right?
Yeah, with the base pair, and then it'll be
Yeah.
smart to buy with the USD as the secondary pair because, like I said, that's going to be the bias towards it. Because, like I said, if you look at this, we can go through it right now. It's been down since what day is this? March 20th, so yesterday. This has been down. So if we look at gold, which is gold and USD second, that means this pair is going to do what?
It's about to go up. So it would
Yeah,
be smart to sell, not sell, but buy in.
yeah, because like I'm talking about from right here, from March 20th. This has been down, so that means from that same date, gold has been going up. If we go back and
Yeah.
look, March 20th, look at that. See?
Damn, that's beautiful.
So look at this Australian dollar, US dollar. So if the dollar index is down and we look at the Australian US dollar, it's going to do the same thing as gold. It's going to also go up. So if we go to it,
Okay. So basically, the DXY could be not even, yeah, you were talking about base pairs, but that could be like a chart that you could base all of your trades off of.
exactly,
If
exactly,
you're trading with the, USD, whether it be your first pair or your second.
exactly. So like I say, if
Okay.
you're doing
I'm
market
gonna keep that in
analysis,
mind because I use TradingView too. Like I said last night, bro, you got a totally different. It's a tool that I saw last night and I was just confused on it. And you brought it up in the group chat and I just let it rock because I was like, it's above my level.
yeah, exactly.
And
So that just exactly what you said. basically, whenever you're doing your analysis, you always got to check this, especially if you trade US dollar pairs. So if you're looking at a US dollar pair and you have your analysis going up, whatever like that, or stuff like that, but if this is like doing the opposite, or if this doesn't support your analysis, don't trade it. You know what I'm saying? Figure out, why it's doing the other thing, because you can have the Australian US dollar going up, right? But if the dollar index is going up also, don't buy that, because it's going to go down. It's just that pairs are different. So it might take them time to either start to react, and some pairs swing more than others, which I'm going to get into next. So again, right here, since March 20th, the dollar index has been down. So if we go to UJ, US dollar, Japanese yen, that means this is going to be going down also since March 20th. If we go to the chart.
So what are the other charts like the dollar index for different currencies?
The only ones really.
Or is the dollar index the only one that really matters?
The dollar index is the only one that really matters, because and here goes what I was talking about. March 20th, it's upside down. So yeah, the dollar index is really the only one that matters, because most of Forex pairs, the good ones that are very volatile and a lot of people trade, are US dollar based. And you have other ones like the Japanese yen dollar, stuff like that, but it's not really that reliable, and people don't really use it like that. You just gotta look at other pairs to kind of make that comparison.
Okay. And how could I calculate minors off of this?
What you mean?
Like, say I wanted to trade um Great British Pound to yen.
Yeah.
Like, could I use the dollar index to kind of base where I put in my trade?
No.
Or even if I put in a trade at all? Or
No,
is it strictly for USD?
That's strictly for USD, because that pair of
Oh,
the
okay.
pound yen, it has nothing to do with US dollar currency. So it doesn't even matter. But you can,
Alright.
if you're doing like the pound dollar versus the pound yen, those two, have a commonality, which is the Great Britain pound. They're both the base pair. So they're both going to pretty much move in the same direction, but with different volatility. So yeah, like I said, like I was telling Mike when I first went over this lesson with him, like you got to be careful when it comes to, and you got to know the difference between knowing your inverse and correlating pairs. Because like I said, if you take a trade for the pound dollar, right? You take a trade for a buy on that, but then on the on UJ, like the US dollar, Japanese yen, you take a sell. They're inverse pairs, so therefore your trades are going to cancel out each other. So that means you have to do them the correct way. It makes sense.
Yeah.
Okay, I'll make
I
sure.
mean, I remember seeing inverse pairs, and I was like, I was paying attention to it, but the pairs that I had open, I really didn't notice that until you pointed it out.
Yeah, because I think you had I think you had, what was it? It was the pound Canadian dollar. I think it was like a buy. Then you had something else with the Canadian dollar first. Was on a I think it was on a buy also, or might be a sell. I don't know. I forgot, but I knew just looking at it, I'm like, that's why that's the only one in the negative, because they're inverse pairs. So that one's, as the other pairs go up, that one's going to sit there and go down.
Yeah.
So yeah, that's something to keep in mind. Just always be cautious and always pay attention to that, knowing your inverse and correlating pairs. If you're trading the pound, and you're buying one with the pound first, and then you're buying another one with the pound second, they're going to cancel out. You got to sell the one with the pound second if you're buying the one with the pound first, if your analysis is correct. All right.
And is this the same type of prediction as any other chart? Not even prediction, but like the same type of analysis that you use for any other chart, or is this treated differently?
What you mean exactly?
Like, huh? Like predicting where the value of the dollar is gonna go.
Yeah, like right here at the dollar index.
Uh-huh.
So I mean, are
Like
you
does it
asking?
does it still have like support and resistance, pullbacks, retests, and all of that?
Oh yeah, exactly. Like I said, that stuff lines up. So like right here, like I have like a continuation triangle right here. So whenever I was taking trades with like that, and I saw like prices getting right here, and I was looking at another chart that was gonna like go down and break a structure, this was supporting that. So once this blue open started to come up, it broke that structure on the other chart. Like everything lines up perfectly. you'll start to see it the more you trade it. Because like I said, I can do the same thing with this chart like I do with other ones. I can look at the daily and sit here and do my, my support and resistance and stuff like that, along with, any other US dollar pair, and everything will line up to where, okay, if I have support, if I have resistance hitting on the Great Britain pound USD, and I got this doing the same thing, it all lines up. Did that answer your question?
Yeah.
Okay, cool. So yeah, just anytime you're doing that, and it's like I said, if you're not sure, just ask, what about that. You'll start to get the hang of it. It's not really a hard concept to get, but it can get confusing. You could start to second guess yourself, and it's always cool to double check. And that's really what trading is about. It's just really about confirmation and double checks and stuff like that. So next thing we're gonna go over is the news. So now I'm gonna really go into depth with this news stuff, what I was talking about before.